Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 26th of May. All right, now we're seeing a little bit of, dominance of the US debt ceiling talks, okay? And there's some US numbers have been coming out a little bit stronger. PCE prices and a few other things. GDP numbers were okay. That they are lower than where they were previously, but they are still above sort of the expectations. Now, there's a couple of things that just aren't fitting into play. And this is where the US dollar is dominating, right? So inflation in the UK, 8.7%. The consensus was 8.2. Now, this doesn't go with what's happened on the currencies, and this is where things are a little bit discombobulated. Now, what the market is looking at closely are the European numbers. Now, the IFO business numbers, a little bit lower than expectations on the business climate and the expectations themselves, but current conditions sort of not there, not too far away. So we're seeing a strong dollar, right? And then this is, as I was saying, you come down through the data that we're seeing, and you know, some of these numbers aren't so bad, right? You come down here through the GDP price index and PCE prices and things like that. So the US market's been quite resilient. Now, they are focusing on some of the oddities, right? And what I'm talking about is the left field stuff. German GDP numbers, okay, suggest the European market is going into recession. And of course, the news services make a bit of a song and dance about it. But the core fact is, I think we're seeing a massive squeeze in positions, right? As we come through the market and we come into today's trading, we're going to be looking at, the PCE price index, durable goods. These are the real sort of solid PCE price numbers, UK retail sales, and a few other things. But still, you can't deny the fact that the market is really dominated by this US debt ceiling. And today, you know, it was back to the positive side, right? So they, as I said, every other day they're going to say it's not working out. The next day it is. But the dollar is cruising to the top side. Now, adding to the potential sort of like safe haven US dollar proxy are some sort of stronger US numbers. And we are seeing the US dollar sort of move to the top side aggressively. And I think on a lot of these positions, and you're looking at the US dollar against the euro, sterling, Aussie, and Kiwi, we've had some massive flush outs, right? This to me is the big flush out of stale long positions. And it'd be very frustrating, right? All we're waiting for is the US to either default or raise their debt ceiling so they can pay their debts. And we are seeing a massive squeeze here in the dollar, and that's happening across the board. Okay, so these are tricky markets when you've got this backdrop. If I have a look at the global markets, okay, and you have a look here, once again, gold, massive clean out of gold longs, right? Everyone was very prepared for, you know, the uncertainty about the US regional banks, and then this US debt ceiling came up. Everyone was buying gold, gold, gold. You know what? We've seen a massive squeeze there, and that's, it's causing a little bit of havoc here across the equity markets. Like the NASDAQ, you wouldn't even know there was anything going on. It's just moving topside, right? And obviously the euro and the dollar index, bit of a mirror image. Crypto's sort of just still drifting lower. And it looks like oil is starting to finally sort of drift back down towards that $70 level. So then when you are looking at the markets, like these aren't easy by any stretch. And even trying to get the move down in euro, the price action here, especially euro and even sterling, I mean, Aussie and Kiwi are a bit clinical. Like this move in the Kiwi was swift through these trend lines. The Aussie had a bit of discombobulation there. These aren't easy, right? It looks easy when you look at the move and you go, oh yeah, that's right. But fundamentally, the US is in trouble, right? They've got the biggest debt in the world, and they're looking to potentially not pay it, or potentially not pay themselves, and the dollar's rallying, right? It doesn't make sense. So when it doesn't make sense, I sort of sit back and have a look and see, where things can fit into play. And this is where the data comes in. And we had UK inflation numbers stronger, right? It's very hard to sell sterling on the back of strong inflation numbers. But you know what? You focus on the weakness. It's not hard to sell euro when we see GDP numbers out of Germany sort of falling off the map, right? That's probably the trade, but it's very hard to decipher which one's which as you go through the trading week. right? And don't forget, the 1st of June is the deadline, I believe, for the US debt to be paid or the debt ceiling to be raised. Anyway, we've got to wait. So just coming to today's trading, UK retail sales. Is this going to be a thing we can trade or not? Well, you know what? Sterling's just had a massive clean out, I guess, and we had really big inflation numbers, which suggest that the Bank of England would have to raise rates. So you're thinking, well, retail sales must be going up. I'd keep an eye on it. It may be a short-term trading opportunity, but with everything sort of a little bit weird, it's hard to sort of stay in the position too long. The consumption numbers and the PCE price index numbers are, and the durable goods for that matter, are probably the ones that will sort of shape the dollar, right? Now, if these numbers are all strong, it goes with the current dollar strength, and we may see a continuation of the current moves. Now, I see a lot of companies, funds sort of squaring up a lot of bits and pieces before the weekend. Don't forget, there's going to be a lot of noise and a lot of news around the debt ceiling over the weekend. It may leave us with nothing more to sort of nothing tangible to get our hands on. As I said, I reckon it's going to be at least another week before we work this out. And then we may see some significant turnarounds in some of these moves. So if you've missed some of these moves, and I haven't actually got any of them myself, right? It looks very easy here. But to me, the dollar, we're going to know what's going on the dollar. Like seriously, with regards the debt ceiling and the massive geopolitical event, I could see a massive turnaround here. So I'm preparing for what can happen if they don't raise the ceiling or if they do. And then you can sort of catch the moves because we've seen what's happened so far. So we've got a part of the answer. We know where the market's been squeezed and we know where the potential is. Okay, is there big potential downside? Probably not just at the moment, right? As I said, I think this is a clean out. We're getting ready for a bigger move when we have the answers. And to me, that's an easier trade than trying to sort of second guess every move around these instruments, right? They may not sort of help you too much, but what I'm trying to say is this isn't easy, okay? It looks easy on some of the moves, but generally speaking, it's not at the moment. There's convoluted news. There's the US debt ceiling with the uncertainty. And this is the tricky part of the financial markets. To me, look for the directional flow that goes with the short-term trends. That's an easier trade than trying to wrestle with the trends themselves. All right, that's it for me, guys. I mean, sorry I couldn't be more specific, but to me, it's a wait-and-see situation, and I'm waiting for answers. I just think the euro, sterling, Aussie, Kiwi are massively overcooked, as is the dollar index, right? So I'm no surprise here to start seeing some of these instruments moving back topside, especially through the, well, I'm on the wrong screen there, especially through the Asian day. Okay, so retracement, yeah, maybe, but you know what? It's not really based off too much except that it's moved too far. All right, guys, have a good one. All the best. Keep an eye on those equity markets. NASDAQ, rip roaring. The rest of them getting belted. All right, let's wait and see what the US come up with regards the debt ceiling. And that's all we can do from here is sort of monitor that situation. Don't forget, my experience over 35 years is these news events. What happens is the news services, they will publish one day, yeah, things are going well. The next day it'll be, no, things are going terrible. And that sort of tennis sort of action just keeps going back and forward until we actually get the decision. So don't get sucked in by the news services. They are not here to help you. They're here to sell advertising. Just remember that. All right, guys, have a good one. Have a good weekend. Cheerio.